Let's take a look at a few more examples. Let's move to the trading screen, and here you can see the same level, and we've taken a look at an example already, and here is the next one, this one right here. And this is a really small false break of this powerful daily level in the 15-minute chart. Once again, a few points beyond the level. As the price moves above the level, we set out our stop order a few points below and just relax and watch what happens. As it moves down, it takes our trade, automatically opening the short position, and then the impulse follows, a really powerful impulse going right into our take profit. And the stop here was quite a short one, since we could allow ourselves to use a technical stop, and it would be a few points above the fuse right here. So our stop would be 10 points. So two times less than our fixed stop, which is quite nice and allows us to increase our take profit ratio. And in this case, I used a 1-to-7 take profit ratio, since I saw that this level is just increasing its power as we move on and as the market develops. As you can see here, it was a small channel, but still the ATR was quite nice and the range was quite nice. So I decided, well, why not? The market moves quite nicely. Let's have a 1-to-7 range. And you could have had 1-to-8, 1-to-9, whatever you would like to have. Here I had 1-to-7 range. So with a stop of 10 points, I've had a take profit of 70. And with the first impulse, my take profit was taken and I have made 70 points. So that's a fantastic example of how these strong, powerful levels work and how easy it is to trade them. And this is pretty much all that you need to know about how to trade a false break. This is a simple one. Then there is a false break with the two candles and the complex false break that you know how to trade all of them. And these are real examples from the real charts and the real market, the DAX indices. Right, let's move to the next example. And here is another fantastic example of the same level again, right after we traded one of these false breaks, this one right here, another one happens just like the one before. And the idea is the same. As you can see here, the market is quite slow and consolidating, and then suddenly it tries to make a run for a break of the level, which of course does not happen. And of course, we are waiting for the break of the level. As soon as the price moves above the level, we set out our stop order right here, a few points below the level. And in this case, the stop was also technical, and it was 15 points, just a few points above the fuse right here. And I take profit. In this case, I had 1-to-4, which was 60 points. And as you can see here, with the first impulse, it goes right into take profit, and I close my trade automatically with the take profit, and I'm quite happy sitting there with plus 60 points. But here, this is another example of the market moving even more. So I could have taken a lot more, and I could have had my take profit near the next level. So if you really wanted to, you could have had your take profit right here next to the next daily key level, which is this one right here. And remember that we traded a few previous examples. We traded from the resistance level, this one right here. But then there is this support one, and that's how we calculate our range and our expectation. And here it is also in the 15-minute chart. And our take profit, it could have been anywhere near this level, which would be still acceptable. But I decided to have a 1-to-4 ratio, and I do really like these kinds of trades where I expect to take just around 30, 40, 50% of the range, and I'm still very, very happy. But it really depends on the situation, and if you want to have a larger take profit, in this case, you could allow yourself to have one, which is absolutely fine. Now here, the next example, once again, a really, really tiny false break, really small one right here of the support level from the daily chart. And the idea is the same. We enter as the price moves back above the level, and we enter, automatically enter with our stop order into climbing prices, opening the long position. And here the stop would be even smaller, 6 points. It's incredible. 6 point stop, and here I had a ratio of take profit of 10-1. So here, 60 points, again, my trade was automatically closed after the really nice impulse that followed after this super small false break. And this is pretty much how it works, and this is pretty much how you trade the false breaks and generally trade the important, powerful key levels in any market. Remember, I'm showing you examples from the DAX that I trade a lot for many years. However, you can trade these key levels in any market, in Forex, in stocks, in even cryptocurrency, in anything. This is pretty much how the market functions. And it does not matter what kind of a market it is, as long as it's a traded product. That's it. All right, let's take a look at a few more examples. So here is another nice example of the false break. Here you can see that it is this one in the daily chart here with the blue arrow is, and it is quite a big false break, which, as I've said before, I do not like. I really prefer to have the shorter false breaks, really small fuses, and for those you have to be watching out, and maybe it can be quite complicated to enter. However, it still is preferable, in my opinion, to trade those really short false breaks. But the bigger false breaks also work, and there is nothing wrong with them. It's just the matter of personal preference. As you can see, this is a really huge, complex false break. At least it looks like in the 15 minutes. But again, in the daily chart, it looks ordinary and just a false break. Now, here, once again, as we move above this level, we will set out our stop order for opening a short position just a few points below. And here we can use, of course, only a fixed stop because the technical would be way too far away. Now, and here would be, of course, 20 points. And here, I believe I used a take profit of 3-1. So quite simple, 20-point risk, 60-point potential return. And with the impulse, the first impulse from this false break, we get our 60 points that we were looking for, and we are quite happy. And again, if you look at this powerful move going down, and then this reversal, this pullback, this is called a pullback, a really small one in the 15-minute time frame, in 15-minute chart. However, this pullback is very easy to explain. A lot of people traded this false break. And here, around this location, they were taking their profits and leaving the market. So they were buying back something that they've sold previously, well, the concept of the short position. And this is what generated this pullback. People closing their falling positions, so their short positions. And here is an example of a false break, which might look like a true break. But it might look like a true break only in the 15-minute chart right here going upwards. And in the daily chart, it is just a false break with two candles that you see right here. And the price has been beyond the level for quite some time, for maybe half a day or so. And then it finally moved above and created a signal for entering into climbing prices and opening a long position. And here, once again, this is an example of a really nasty situation where it might take quite a few tries to get a nice working trade. And here, of course, as we are beyond the level, anywhere around this location in the daily chart, as we are beyond the level, we set out our stop order for opening a position into climbing prices, a long position, which would be the trade if we were trading the false break model. And as the price moves above, our trade is automatically opened. As you can see in this green arrow right here, this is where the trade was opened, this precise location, and our stop would be a fixed one. The technical one would not be possible, so I used a fixed stop of 20 points right here. And the take profit, I wanted to have a 1-to-3 ratio and to take 60 points. And as you can see here, the price does not really show me an impulse that I'm looking for. And here I got my hopes up and thought that this was the impulse, but then it quickly returned, almost stopped me out right here, and then it moved back up, and it just was a nightmare to watch and really frustrating to actually see that okay, we are halfway to our take profit, and then boom, we are back into the negative area of having negative points, so having a loss, and then again into profit, and then we are stopped out with this candle right here, which is very, very upsetting. But it's okay, it's part of work, and there is nothing to worry about, and losing 20 points is losing 20 points. It's just like making 100 points, making 20 points, losing 20 points, losing 100 points. It's okay, it's part of the job. And here, what I have to do is, at the same level, I set out another stop order for entering into climbing prices. So another opportunity for another try to trade this false break. And the idea is the same. Again, fixed stop, because the technical was a little bit larger than fixed stop, and the take profit is the same, 60 points, 1-to-3 ratio. The price almost made it to the take profit, and then it returned almost to the zero, so to the entry level. Well, this happens, and you have to stand it, because a lot of times, just like in this example, a really powerful move follows for whatever reason, and the real impulse comes. So, and here is our take profit level, and this is where our take profit was taken, and our trade closed with plus 60 points. So we lost 20 points on the first try and made 60 points on the second try, meaning that a really nice profit of 40 points. All right, let's take a look at the last example for this lesson. And in this example, we can see that there was a small false break following the false break that I was just showing you. And this is also a really nice opportunity for trading. Trading the first false break, taking a really nice profit, and then seeing the market coming back to the level and trading another false break. And that's how sometimes you get 5-10 trades per day, and it makes you really, really happy at the end of the day. Now, here, everything is super, super simple. The market comes to the level with quite a long, powerful candles, which once again is the sign of a potential reversal and of the level reversing the market movement, which actually happens here and is quite easy to see and easy to trade it. So this is a false break with two candles. As the price moves beyond the level, we set out our stop order right here, and as it moves above, it's taken, the position is opened, and in this precise situation I used a fixed stop of 20 points, and it's pretty much the size of the technical stop as well, which is fine. And I used once again a 1-to-3 ratio, so my take profit was around here with 60 points. So that was my expectation for this trade. And as you can see here, the impulse follows a really, really nice impulse. And right here with this small tail, our take profit is taken, and the trade is closed with plus 60 points. And another example of the market moving even more. All right, that's it for this lesson. And in the next lesson, I'll show you a few more examples. For the time being, don't forget about the test, enjoy your homework, and I'll see you in the next lesson.